What's up everyone, Dylan here. I wanted to hop on to do another episode of the analysis video. So with that said, we'll hop right into it. I spoke last week about the large rally that we saw. I gave reasoning to back that rally up. We talked about technical factors, structural factors, seasonality factors, positioning such as FOMO, momentum, right? There were multiple different factors backing up the recent rally that we have seen, okay? In plain English, the bulls remain in control. Every single time that there has been a dip over the last, week minimum, the bulls are very, very quick to react. They step in buying the dip, and they basically have been printing higher lows and higher highs on the way up. And, in fact, it seems like every single day the market makes new all-time highs, okay? So without a doubt, the market remains in the bulls' court, okay? Now, that's not to say that the market cannot come off anytime soon, right? So I wanted to talk about some facts, some historical data, stuff like that. So as I mentioned last week in last week's video, there has been good data backing up this most recent gain, right? A lot of people will be negative and say, oh, the market can't go higher, it's too stretched, it's too overbought, it's due for a correction, so on and so forth. But like I said, there has been data backing up the recent momentum, and whether you like it or not, it can still continue much higher than most people think. Okay, so this is from Seth Golden on Twitter. He wrote, through the first 217 trading days of the year, S&P 500 is up greater than 20%. Of the prior 11 occurrences, the absolute worst the market did by year end was gain another 0.5%. In other words, history suggests SPX will close out 2025 above 6,000 if the median gain is achieved above 6,200. Okay? So that's that. Also, there has been over $12 billion worth of inflows each day for the past week. I haven't seen these figures since 2016. That was said by a fellow at Goldman Sachs. And then one last thing. Last week's notional U.S. long buying was the second largest in the past 5 years, behind March of 2023, and ranks in the 100th percentile. Okay, so clearly there has been strong buying and other factors that have been causing this move up. Okay, so can it continue higher? The answer is that historically, based on what has happened up until this point, it usually does continue higher. Okay, so let's, I wanted to preface and start by saying that, and then go into a contradicting statement in that Dylan attempted a short on Fridays. Okay, so I want to talk about it. I'm going to bring up the Discord. This was posted Friday morning at 9:12, about, 18 minutes before the market opened on Friday. Okay, basically gave, a visual of it, made new all-time highs yesterday after blah, 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 right? Basically talk about how the bulls have been in control. I said, let's see, if ES hits 6,035-ish in the next couple sessions, I'll look to short. That's the calculated resistance area I've come up with. So what did I see there? Okay, let's go over it. So the ES or S&P, whatever instrument you look at, you could find this on the futures. You could find this on the cash index, right? You could view it on a few different things. Okay, so I'm going to draw it like that. It's a little bit cleaner on US 500, but it works on the S&P 500 futures as well. So basically, I found this large channel, parallel channel that has been respecting very, very well since early September, right? With 3 different tests to the downside, and then about 3 or 4 tests to the upside as well. Like I said, it's a little bit cleaner on the cash index, but this will do. Okay, so we came up into this area on Friday. Okay, as you can see, Friday late in the day at 2 p.m., around there, it came up into this general area where that resistance of the parallel channel got tested. Okay, so basically I waited for it to make a high, which at the time was 6,040.5, and then I shorted on the way down, starting at 6,035 when it broke back into the parallel channel. Okay, and because it was counter trend, I wanted my first target to be on the defensive side of things, meaning, I wasn't looking for much because I was going counter trend, I was going counter momentum. The S&P had just made all-time highs, so in plain English, me trying to short was against the trend, and it was playing counter trend. And that being said, the probability was lower. Okay, so my first target got hit, which was the anchored VWAP spanning from the session lows, and as you could see, we basically sold off right from that 6,035-ish area and then came right into the anchored VWAP where it bounced. I covered 25% of this position, and then upon the Sunday night reopen, I ended up getting stopped out of the remaining contracts at break even. Okay, so at this very moment, I am not in a position anymore, but I do want to be transparent and say that I did attempt to short, even though technically speaking it was lower probability. However, I had numerous different confirmations. It wasn't just this parallel channel. I had 7 or 8 different confirmations, and I talked about them in the Discord. Okay, so I want to read something as Peter Lynch famously said. He said, and I really like this quote, he said, "There is nobody on earth who is capable of picking market tops consistently. And the only person who will get it right is the one who has already tried 50 times. Unfortunately, that person will be too broke to profit from it when it comes and would have missed life-changing opportunities on the long side." Okay, so I like that quote a lot. Now, basically what I'm saying is, if you do see a short opportunity in the current day and age, take it. Right, if you have a good quality short position and you have multiple pieces of context that back your thesis, do it. But what I'm not saying, or what I still am saying, is not to be stubborn. Do not continuously try if you're not getting the move that you're looking for, right? Like I stopped out last night of the remaining contracts for a very, very small gain overall, and notice how I didn't continue to try again, right? Oftentimes, people with a very, very close-minded viewpoint that are looking for a correction every single week, they are constantly trying to go counter trend, and like Peter Lynch said, by the time that they do get it, they will be broke from the 50 other times that they tried and failed, right? So in plain English, in the larger scheme of the market, it is higher quality to go with the trend. Okay, when you fight trend and fight momentum, like I technically did, but within reason, in my opinion, when you constantly try to do that, the odds are against you. That's a fact. Okay, so I wanted to write that before I continue. So this week we have CPI Wednesday, we have PPI and jobless claims on Thursday, as well as Powell speaking on Thursday, and then you have retail sales on Friday. So this structure that we see in front of us is going to be very, very important. As of this moment, S&P has been failing there. Even though it broke Friday's highs today, it still failed there on a higher time frame, right? We're looking at a 4-hour, and you could see it has not closed above that resistance of this parallel channel on a 4-hour time frame. So I would continue looking at this general area. Right now it sits at around 6,046, but as time progresses, that line is going to go higher and higher because it's an ascending line. Okay, so going forward, I recommend looking at that. Okay, and like I said, if you have a short opportunity, go for it, take it. I'm not gonna stand here and say that it is impossible for the S&P and the Nasdaq to come lower. All I'm saying is, from a pure probability standpoint, buying dips is a higher probability trade. Okay, so bulls remain in control, dips continue being bought quickly, and market tops only form after a key support gets broken. So I said, as long as 6,000 on ES acts as support, bulls have the advantage. Okay, very, very simply put. So if we actually do get a nice sell-off, where am I looking at going forward, right? So the NASDAQ has been kind of dilly-dallying around previous all-time highs that were formed back in early July. But like I said, every single dip we have seen over the last couple days has been bought. So you're not seeing, if you're a bear, you're not seeing that continuation to the downside that you're looking for. So if we do get it, like I said, where am I looking at for downside targets? Okay, to start off, I will be looking at this key trend line. So this trend line it was previously deemed as resistance, as you could see numerous times, right? 4 or 5 different times, spanning from late August to end of October. Okay, so 4 or 5 different tests there, and then we had a nice breakout after Trump won the election, and since then it has not been retested since making new all-time highs. So if we do get a sell-off, that would be an area that I look closely at in terms of gauging relative strength and weakness. Okay, and that's about 1.5% to the downside. Okay, on the S&P, I would want to look at this general area here that acted as resistance last week. Okay, so this general area here, about 6,010. As you can see, it was recent resistance from last Thursday, and then overnight into the Friday session. Okay, so 6,010 would be a key area to look at, and then I would give that like a 10-point cushion down to 6,000. Basically, the bulls want to try their best to defend that general area, and if they cannot, with a strong VIX as a combination factor, if S&P futures break below 6,000 and you have a strong VIX above recent highs, then the sell-off can, kind of pick up some momentum. And ultimately, I would look for the price action at this retest of that NASDAQ trend line that I just went over. Okay, so that's where I'm heading. That's where my head is at in the very, very near term. Okay, so overall, this large structure, this parallel channel is going to be very, very important because we have been struggling there on the S&P, right, over the last few months. What is that? Since, call it September, okay? And every time it gets up there, it struggles, it fails, and it sells off. Will that happen this time around? Who knows? Obviously, I put money behind the table to bet on that fact on Friday, but it didn't give me the continuation that I was looking for, and since then, I stopped out for a small gain, okay? So going forward, these are the areas that I will be looking at, and that's about it. That's all I have today. If you guys have any questions, hit me up in the comments below or in the Discord, and that's it. I'll talk to you guys soon. Peace.